Welcome to another Forex trading video in which I will test another Forex strategy. The whole purpose of this video is to take a simple strategy and then check out what would be the realistic expectations if you're doing the strategy over and over again. The key benefit, I believe, is that I will show you how to test out pretty much any strategy that you want in a real-time environment. I've seen a lot of videos where they're testing out new strategies by showing the future results and then saying, okay, this would have worked here if we did it. So what I'm going to do is different, is that I'm going to test this full strategy without actually seeing future results. So I will show you that how I do this in a second, but let me just explain the strategy first. To determine the trend direction, I'm going to use the exponential moving average. And then for actual entry signals, I'm going to use the stochastic oscillator. Here's how it looks in MetaTrader. Here's my chart, and here, let me edit it, I have the moving average, 50 period moving average, and the MA method will be exponential. So I'm only going to trade in the direction of the trend. So if the price is below the moving average, I'm only going to look for sell signals. Whereas if the price is above the moving average, I'm only going to look for entry signals, so buy signals. Now for the actual signals, I'm going to use the stochastic oscillator. Now I have changed something here. So the %K period, I've adjusted it and I'm using 10 instead of the default 5. 10 is a little bit longer term, so it should give me better quality signals. So the way the stochastic oscillator works is that we have these two lines here on the 80 level and on the 20 level. When the two lines are below the 20 level and they cross over, it means the price is oversold and now it's a time to buy, so to go long. Now if the line is above the 80 level and they cross over, it means the price is overbought and it's a chance to sell. So I'm only going to look for buy signals when we have a crossover and it's below the 20 line, and I'm looking for sell signals when the lines cross over above the 80 level, only in the direction of the trend. So I'll show you how this would look in a textbook example. So here's an example of a short trade. The price is below the moving average, and if you look closely over here, the stochastic oscillator is in the overbought area and the lines have crossed. So it's below the moving average, lines have crossed, so I'm going to take a sell position. And we take profit here. It's on the 1.5 reward level. I'll show you what I mean by this in a second. Now here's an example of a long trade. So the price is above the exponential moving average, so we're looking for entry signals. And then here we can see that the stochastic oscillator was the below 20 level, which means it's oversold and it has crossed over here, so it gives us an entry signal here. So here on this level we have an entry signal. Again, 1.5 R, that's the take profit area, and this is how the trade would have worked out. So here I would say are two textbook examples of how the trades should look like, but let's see how it works in real time. Now here are the strategy guidelines. So I'm going to use the FX pair Euro Australian dollar. The time frame will be 15-minute charts only. And I'm going to start the experiment from the 1st of July 2022. Now the risk reward ratio, I'm going to use 1 to 1.5. So what this means is if I am risking 10 pips, so that's my 1R risk, the reward ratio will be 1.5, which means that I would get 15 pips. So the whole basis here is that I will always earn more in success trades and lose less in losing trades. For the stop loss level, there are two options here. I'm either going to use the exponential moving average as the stop loss, if it makes sense to do so, or I'm just going to look at previous highs or previous lows and use that as the stop loss level. I will show you how this looks in action in a second, and I'm going to aim for at least 50 trades. So it's 15-minute time frame. Hopefully we get to 100 trades, but we'll see how it goes. Okay, so let's get started on MetaTrader. So first I'm going to turn on my Forex Simulator. It's called Soft for FX Forex Simulator. I'll check if my data is up to date. Now I'm going to be using the Euro AUD. Yep, that's fine. And I'm create a new simulation. So I'll select the Euro AUD, select the time frame for 2022 and July the 1st. I'm not ending the simulation. Oh, and here, time on charts, I'm going to select the New York close. The thing is, if I use the GMT, then I will have some candles on a Sunday, and I don't want that. So New York close. And just for my indicators, I'm going to preload, say, 120 days worth of data. Okay, let's start the simulation. So I'm going to be trading with the 15-minute charts. So let me open the chart. Let's close this. And let me format my chart. Okay, so I have formatted the chart with the 50 EMA, moving average, and my stochastic oscillator. So let's start. So what I can do is I can click on the next bar here, or I can click on the space and get my data. So the beauty of this Forex simulator is that here's my, say, real-time data. I cannot see what the price will actually move. So when I actually do enter trades, it's much better way of testing it, because then afterwards the candles will reveal it themselves and I will be able to figure out whether it's a good trade or a bad trade. So at this moment we have an upward trade as the candles are above the EMA, and we don't have any entry signal. So if the candles are above the EMA and if the oscillator crosses over below the 20 limit line, then I will have an entry signal. Okay, so let's move it forward. And actually what I can do is I can even set the number of ticks I want and click here, so it will be automatically moving the candles forward. Okay, we have the first crossover here. However, the problem is that the price suddenly dropped and it's below the EMA. So this is not a valid buy signal. Let's keep searching. Here is a good setup. So the price is below the EMA, which signals a downtrend to me, and we have a crossover like this. Now, could be a little bit early, but I'm going to take this trade. So here's what I'm going to do. This is going to be my entry level, and I'm going to set the stop loss, not the EMA because it's too close, but the previous peak. So my stop loss will be 61 pips, let's say 60 pips. And so that's my 1R, one risk, 60 pips. So 1.5 times 60 means 90 pips is going to be my take profit level. So here we have my take profit level, 90 pips. So I will set it up using the simulator here. So the stop loss will be 60 and the take profit will be 90. And I'm going to sell. Now let's see what happens. Let's see how it plays out. Okay, first trade turns out to be a loser. Doesn't matter. Let's keep going. Okay, here's another setup and I'm going to take it. So, but what I'll do in this case, because again, moving average is a little bit too close, but we have this giant drop here. So I think I'll set the stop loss maybe halfway from it. So let's say about 50 pips. So this will be 50 and the take profit will be 75 and I will sell it. Okay, second trade turned out to be profitable. Here's another one. So I'm not going to set the, I mean, technically I could set it here, but I think it would be a little bit safer to set it above this peak. So that would be 60 pips, and that's what I'm going to do. Okay, so that did not go to my favor. It turned out to be a losing trade. Let's continue. So in this case, again, it would be a judgment call. I can use the EMA as a stop loss, or I can use this one. So I think I will go for, let's go for 40, the stop loss. So using the last peak. So the stop loss is 40, which means take profit is 60. Okay, and this was a good trade. This is basically how I'm going to complete the rest of this experiment, and I will share my results once I complete these trades. Okay, I've completed enough trades to see how the system works. I will show you exactly how many trades I've completed by clicking here on trades. Okay, so I have completed so far 70 trades, and that's plenty. So I started on the, well, I had my chart set for the 1st of July, and the last trade was completed on the 17th of October. So this Forex Simulator is very useful because it makes a record of all of my trades. Now I can export these trades to an Excel file, which I think will be very, very useful, but I can have a look at the statistics here. But let me actually calculate this using a spreadsheet, and I'll show you some interesting insights. Okay, so I've generated a couple of interesting statistics, and you can see them here. So the test, like 70 trades on 15-minute chart, that is going to take you a lot of time to sit in front of a computer, find trades, and then enter the trades at the right time. So when you're analyzing some of the trades that I have taken, that I've shown you, sure, they may not be ideal, but the thing is, when you're trading, you will not always find ideal type of setups. I wanted to show you this, that I know that some people say, okay, you should perform tests on 100 trades, but the reality is when you're trading, it takes time to sit in front of a computer, find the right trades, enter at the right moment, and you're also going to miss a lot of good setups. That's the reality of trading. But I wanted to show you that I started this test on the 1st of July, 2022, and then the last trade was on the 17th of October, 2022. 3.5 months passed from the first to the last trade. So overall, I had 22 profitable trades, 48 losing trades, which means the win percentage is only 31%, 1 in 3. And with, let's say in this experiment that we win $1.50, we lose $1, because it is a 1.5 reward to a 1 risk. That would mean that after 22 trades, we would have $33, but after 48 losing trades, we have $48 loss, which gives us a balance of minus $15. So overall, you may see different YouTube videos showing you that the stochastic indicator is absolutely brilliant, but in my experience from this type of testing that I have completed here, this strategy, it's a simple strategy with an exponential moving average and a stochastic oscillator. The strategy has failed, and I just don't see it. Even if I did 100 trades or 200 trades, I believe the result would be the same. And as you also noticed, when I was running this experiment, I think it's a really, really good feature that I cannot see what will happen. And these sudden spikes of pips, it happens. It's a reality of the Forex market. Anything can happen. I mean, here we have a nice pattern where we were entering long trades and winning, but the market, it doesn't always work like this. Yeah, so if you have any feedback based on my testing, or if you have any ideas how I could improve this strategy, feel free to share it in the comments below this video. Also, if you want to run your own type of tests and for your own strategies, the tool that I have been using, it's called Soft4FX. It's a Forex Simulator. There will be a link in the description below, so you can just click on it, get your version. The thing which I really like about this simulator is that it's very easy to use, as you saw in this video, but also you don't have to pay ongoing data fees. It's just a one-time payment. You get the plugin, it's for MetaTrader 4. You get free data. Okay, so thank you for watching my Forex trading strategy. And yeah, feel free to comment, subscribe if you found this interesting. And yeah, I'll update you shortly with another testing strategy. Thanks for watching. Bye.